So, good morning, all investors. Thank you for joining today's webinar, during which we are going to present a new public bond offering. Orion Securities is undertaking on a Baltic Nasdaq exchange, and this bond offering is of one of the largest solar projects developer in our region, Sun Investment Group. And today with us, we have a representative of Sun Investment Group, Deividas Varabauskas, who is a CEO and a founder of the company. From Orion side, so from the arranger side, it's gonna be me, Mykantas Urba, head of corporate finance department at Orion. And jumping to the introductory slide regarding the offering. So, as was already published, we have started this offering this Monday, and it is an offering of up to 8 million euros of bonds with a maturity of 24 months and a coupon rate 11.5%. It's worth noting that this is not a first issue of the company. Actually, the company has issued a 5 million euro bond 1 year ago, which is maturing on 29th of November. So this is a subsequent issue, also a tap issue, increasing in the amounts. So the goal of the issue is to raise additional amounts which would be used to further finance project development activities of the issuer, working capital needs, and also refinancing the currently maturing bonds. As well as was present on the last issue, this bond is secured. It is secured with a portfolio of solar projects in Italy. We're gonna cover the activities of the issuer. So one part of activities is in Poland, another in Italy. So the portfolios which are offered as a primary pledge are located in Italy, and it consists of 378 megawatt of solar development projects in a rather early stage, but which is constantly advancing, and then it is planned that within a couple of years' time, it's gonna reach a ready-to-build stage. Also, going quickly through the term sheet, what's worth noting, it is a public issue as was on the last year, so it means that investment amount is not limited. It could be invested as little as one bond, 1,000 euros, up to, of course, the whole issue. The placement is being done through the Nasdaq stock exchange system. So any investor who has an investment account opened within a financial broker or a bank participating in the Nasdaq system can participate in this offering. So I guess that's nothing new, and it's very convenient both for Latvian and Estonian investors to simply contact their brokerage and submit an offer, submit a subscription order through their system. The offering, as I mentioned, started this Monday, and it's gonna be going till 22nd of November. And the issue date is on 29th. Why we have a 1 week lag? 1 week lag is just to make sure that the redemption of old bonds and issue of new bonds are on the same date, so that it is possible to conveniently replace for the current investors who want to remain in this offering. They can replace all bonds through to the new bonds. And this replacement also gonna be done through Nasdaq Central Depository System, Securities Corporate Action. All investors should have received already emails, notifications from their banks with an offer to replace current bonds to the new ones. So what investors have to do is simply react to that corporate action message, contact their brokerage account manager, and use this simplified procedure to replace the nominal value of all bonds to the nominal value of new bonds. Regarding collateral, I have already mentioned primary pledge of Italian portfolio companies. Also, we have additional special undertakings which restrict possibility to get debt on these pledged companies, also to sell any assets of each pledged company. So this is done to make sure that all the assets created, so construction permits, various land use agreements gonna be in place of those companies, the shares of which are pledged. As I mentioned, this is a 2 year, so 24 months maturity bond, but the issuer has a right of early redemption after 1 year with paying 1% early redemption premium. Before moving on towards description of a company business, as always, we want to mention investment highlights, what we like and what are the key points of this issue. So first one is, of course, that this is an experienced issuer, experience in its business undertakings. We're gonna cover that the company has a long history of developing overall large also portfolio of renewable assets in Poland and in Italy. Also, what's worth mentioning and what has changed since the last year issue, that the company moved from development of early stage projects towards the construction stage. The company already has 300 megawatts ready to build projects in Poland, which are started of being built. So 30 megawatts of that 300 is already under construction, and it is planned that within next 2 years, so till mid 2026, all these 300 megawatts will be constructed. So also strategically, there is a discussion that the company considers selling only part of these 300 megawatts and remaining controlling 200 megawatts and becoming an electricity producer. So there is a move from development towards construction and ownership of already operating solar parks. Of course, green sector, renewable energy sector, it's already in its advanced stage. We have moved through during last 10 years from government support towards operating at market conditions, so which only shows that financially this sector is robust and also strategically important because it solves energy dependence issues, replacing fossil fuels, which are of high importance in the key markets where the developer is operating, so meaning Poland and Italy. And of course, last but not least, moving towards bond structure, it is a medium offering, 24 months. So if analyzing what kind of offerings we have in the Baltic market, we see that up to 3 years for corporate bonds is a standard, so 2 years is a bit on a medium range. And the issuer is offering fixed 11.5% coupon rate, which is not attached towards any Euribor. So we see it as a good opportunity for the investors to lock fixed yield in current decreasing interest rate environment. And of course, considering the operational position, financial position, and security provided by the bonds, we think that this is a really a good return to risk offering. So that's a short introduction, and now I give a floor to Deividas, who will introduce the group and tell about the history and then plans and strategy.
Hello, everyone. My name is Deividas Varabauskas, and I'm the founder and CEO of Sun Investment Group. Sun Investment Group currently has around 80 in-house experts, and since 2017, we have established ourselves in Polish, Italian, and Lithuanian markets. We have successfully built and divested or sold more than 200 megawatts of solar projects across these geographies, mostly in Poland and then in Lithuania. We have also managed to build up a portfolio, a pipeline of projects of more than 3 gigawatts across these three countries, the majority of which is concentrated in Poland, and then followed by Italy, and to some minor degree in Lithuania. We are operating from 4 offices, 2 of them local ones dedicated to greenfield development, which is Poland and Italy. Excuse me. And then all the corporate management and group services are performed from Vilnius and from a smaller office in Madrid, where we are covering all the necessities of the group. So maybe it is important to mention that Sun Investment Group is a vertically integrated developer, which means that we are able and have demonstrated that we can develop projects from scratch across all these geographies. So it means that we find land by ourselves. We prepare all the engineering, all the paperwork required to obtain various permits like environmental assessment, like zoning plans, like building permits and grid connections. Then we have a construction management and EPC management department, quite a strong one, also with execution teams in Poland and in Lithuania, where we are building non-stop since 2017. So it means that we are able to build solar projects at a very, very, very low cost, because we have cut out basically all the margins in all the value chain of a built PV project. The only thing that we don't do in Poland is we don't have our own installers. We do have them here in Lithuania because it's a bit specific market, more related to industrial consumers. And then we carry on into retaining long-term O&M contracts for the assets that we build. And we also do asset management, meaning anything related to the reporting or regulatory requirements of the projects that we build and sell. So maybe let's pass to the next slide.
Also, quick technical note, please, if you have any questions, submitting using a Q&A window, we will collect it and answer after we have finished with the presentation. So yeah, please continue, David.
Yep. So as I have mentioned, we have started our activities in 2017. We have started them in the UK at the end of a support scheme that was valid at that point in time. So we have successfully raised capital, acquired a 2 megawatt project in ready-to-build stage. We have secured an EPC contractor, managed to commission the project in time, within budget, and then we have sold the project to a family office from Germany. Then in the same year, we have seen an opportunity in Lithuania, an EPC opportunity, because of various programs that were granting subsidies to industrial consumers. for their direct investment for self-consumption. So we have set up an EPC company through a joint venture with a Spanish company called I plus D Energias. Today they are called ID Energy Group. Also quite a successful company. And at the same time, we have seen an opportunity in Poland, which was just in its beginning steps. So we have acquired a 43 megawatt ready-to-build portfolio with CFD auction 1 already. So it just had to be built. But of course, at that time, it was quite challenging to find financing, and it was not very clear about the exit routes to those operational projects, but we understood that it is only a matter of time. So we partnered up with ID Energy Group, also with Energia, which is another Lithuanian energy company, mostly focused on wind and biomass. So we've set up a joint venture and successfully built these 43 megawatts. It took us a couple of years to do that. In that time, we have grown the team in Poland, also here in Lithuania. EPC business was running quite successfully. We were leading in the market at that time. We have then did a deal for an acquisition of 66 megawatts from another developer in Poland, which is now acquired by Equinor. And we have partnered up with an infrastructure fund management company here in Lithuania, Lords LB, and one of their funds has invested in this opportunity. So we had already a pre-agreed exit route where Lords LB became the long-term owner of the asset once they have become operational. So in 2019, as the time was going and we have gathered the very valuable experience in Poland, we have identified a very clear opportunity that the market to become a greenfield developer as well, instead of just acquiring ready-to-build projects in the market, which was becoming quite difficult because of a tough competition. Because all the financial investors were pouring into Poland. It's a big market. It suddenly became bankable. Everybody understood the CFD scheme. Banks started liking it. Equity investors started liking it. All sorts of capital became available. So that was kind of an explosion moment in Poland. So we have set up a greenfield development team, and from its inception in the first year, we have been able to secure enough land for 400 megawatts or more of PV projects. So mostly small scale, but we have also signed large scale agreements, which were not very usual at that time, but it was the right decision as we see today. Due to the early deals that I have mentioned, the 43 megawatts that we have done, and we have did a successful divestment. We sold these projects to Aberdeen Standard Investments, which suddenly, attracted the media's attention. And we were listed among the top 50 European solar energy companies. So that was a good achievement for us. At that time, in 2020, we also decided to enter the Italian market because we saw the pattern. Basically, our success in Poland was related to the fact that we have moved in early. So we understood the theoretical and the legal framework. So we understood that the market will develop. I mean, there was no doubt about it. So we benefited from this early mover factor. We did the same in Italy. So we moved in when there were very little activity going on in Italy, but the key pillars on which to build a success story were there. High energy prices, not enough renewables, high solar radiation and very little competition. So, okay, so we moved in. In that time, we have commissioned and sold the 66 megawatts. That was kind of the last time when we did a project construction, development, divestment in partnership with somebody. From that point on, we have moved on to do things exclusively by ourselves. We made our first acquisition on our own on the balance sheet. So we acquired another 24 megawatts of ready-to-build projects because obviously our own greenfield projects still needed time to get to a ready-to-build stage. That takes around 2 years. So that was also a very good decision. We have successfully participated in the CFD auction in Poland. We have all our projects were awarded the contract for difference contracts. And we have built these projects and divested to them in 2022. It was a very profitable transaction for us. Again, in that time, in 2021, again, we are listed in among top 50 largest developers in Europe. After that divestment of 24 megawatts, and at that time here, what we don't see, we will see in other slides. We have already grown our pipeline very, very considerably. At that time, we have already had more than 200 employees, mostly concentrated in Poland, where we have been trying to make the most out of this rush to secure land. Getting land now is much, much, much more difficult than it was back in the day. So in 2022, we already had, I think, 2 gigawatts or more of pipeline in Poland, and I don't know, 300-400 in Italy. So in 2023, we decided to maybe what's worth mentioning, up to that time, we were relying only on institutional investors to resolve our financing needs, mostly on project level. But in 2023, we have decided to try new ways of funding ourselves, and we have issued our first Topco bond, which is what Mykantas has mentioned, and probably quite a few of you here today have invested in it as well. So that was a successful bond emission. We have seen that this path to capital is feasible, and we will definitely get back to the market and continue getting back into the market because we are a growing company and with significant capital needs, not only on project level, but also on a corporate level. Because as mentioned before, we are vertically integrated and we perform majority of development tasks in-house, which allows us to save a lot of money because we are not buying those services outside. We have volume, and as it is a project business where divestments happen, once every few years, it means that we are funding ourselves through this corporate debt mostly, and income from EPC activities in Lithuania. So since that bond emission, what we have accomplished is we have secured a new project level development loan in Poland, which allowed us to try to monetize the projects that have all the permits, which is more than 1 gigawatt in Poland, but don't have grid access. And there is a new possibility to connect these projects by sharing infrastructure upgrade costs with a utility company where we want to connect. So in order to do that exercise, we need to apply for grid access, we need to pay grid deposits, and those are also significant amounts. So we got roughly 4 million euros just for grid deposits, and this is something that we are actively pursuing right now. We already saw some first successes. We received another 30 megawatts of new grid conditions, and we are expecting to receive significant number more. At the same time, as Mykantas has already mentioned, we have these 300 megawatts in ready-to-build stage that we need and plan to build till mid-2026, but with construction starting already. So we have signed our first construction facility for this period. It's a 16 million euro revolving credit line, and which allows us to build roughly 30 megawatts simultaneously. So we are planning to build up to 100, maybe 120 megawatts using this facility alone. It has a duration of 3 years, I think. And at the same time, we are working on securing additional financing for the remaining projects. Yeah, probably here. So, as I've already mentioned briefly, we have two business lines, so to speak, or two separate, let's say, departments. Yes. So our core business is project development, and greenfield development is a very important part of it. So we are originating projects by ourselves in Poland, Italy, and Lithuania. So we have these specialized teams that are able to deal with landowners, with all the local and national institutions. We are able to do the engineering, and yeah, so this is our core activity, which is also expanding into batteries and wind, as there are more opportunities to monetize on the current grid access points that we have in Poland as well. And then we have an EPC and O&M, which in Lithuania is a standalone business by itself, which provides services to third parties, mostly to big industrial consumers here. As I have mentioned, there are quite lucrative subsidies available to industrialists and also now to other sorts of businesses, like agriculture businesses and I don't know, whatever consumer basically. So SMEs also have a good line of subsidies here. So we are providing service to them. It's a steady business, generating more or less stable cash flows and a steady profit annually since 2017. In Poland and in Lithuania as well, we also do the EPC for our own project, so for our development business. And this is the dominating, let's say, trend right now. So in Lithuania, we are developing these smaller projects between 1 and 6 megawatts that are called remote PV plants. Yeah, maybe without the need to go too deep into that. Volumes are not great, around 20 something megawatts overall, but it's also providing additional work for our EPC company. In Poland, obviously, we are building just for ourselves because the volumes are really big. So we don't really have time or intention to develop an EPC standalone business in Poland.
So just maybe one comment, EPC, what stands behind? So to simplify, it's construction.
Engineering, procurement, and construction.
Yeah, so it's construction business, cash flow, steady business, and the first one is development, creating the project.
Project business, yeah.
Yeah.
So here you see a simplified graph or visualized graph of life cycle of a project. So first, everything starts from securing the land. You need a place where to build the project. Then depending on the country, so in Poland, you need to obtain all the land permits first in order to be able to apply for grid connection, meaning that you need to invest into environmental studies, zoning studies, getting these permits. And once you have that, you can apply for grid and you can apply for building permit, which happens simultaneously. In Italy, first you secure land, then you request for grid. Once you get the grid, you go into the permitting, which works slightly different from Poland, but also goes through environmental part, which takes the longest time probably. And after that, you get into the building permit, which is autorizzazione unica. And then there is some time that you need to wait to get feedback from any stakeholders like neighbors or whatever. So once the project is ready to build, we need to start getting ready for the construction of a project, which means if we don't sell project at RTB, which we never do, simply because there's quite a bit of additional value to be realized through building the project. Then, apart from organizing all the EPC activities, which is done in-house, so doing the engineering, planning the schedules, negotiating with equipment suppliers, negotiating with various subcontractors. And yeah, so that takes time. And it's like a streamlined process inside of the company. Then, depending on the situation, we need to work on an offtake strategy, which is either merchant, meaning that you don't secure any long-term contracts for electricity, or you sign a 5-10 year PPA with either a corporate consumer and then consumer, or a utility or energy trader. Or you go into some state auction like in Poland, so a CFD, for all or for part of the volume of electricity that you produce. As I said, that is optional because for certain investors, they prefer a merchant, like if an investor is a utility, so what they are looking is energy and not cash flows. If it is a financial investor, they would like that there are offtake contracts in place for which they are paying premium. And then long-term financing providers like banks or like project financing 15, 20 year. So they would also require a certain offtake agreement, which might not need to be in place at the moment of construction, but would need to be entered into within a certain amount of time after the project becomes operational.
Yeah. Maybe, Deividas, you could comment how long does it take for the greenfield stage to complete and for the construction stage to complete?
Yeah, so the greenfield stage takes between 2 and 3 or sometimes even 4 years. So in Poland, it is roughly 2 years. In Italy, it can be up to 4. Right now, it's going to accelerate due to the clarification of development rules and kind of beefing up of the institutions responsible for permitting, so staffing them with adequate amount of people, giving them funding, etc. All that took time, which was kind of a lost year, so to speak, the last 12 months, while the new government was redefining or actually finalizing the definitions of the rules of development that were not finished by the previous government. So yeah, so we got caught up a little bit in between. We lost a bit of time, but yep. Then, so once the project is built, it needs to be connected to the grid. So a lot of testing is involved with the utility company. Once all the tests are performed, you get some sort of a certificate, depending on the country. You get the final permit to use the land, where you demonstrate that you have built a project according to building permit. and environmental permit. And once all that is done, you are registered energy producer, the project, I mean, you get a generation license, and then you either divest or refinance the project and keep it on the books. Yes, so here you can see a little bit the evolution of the size of a portfolio that SIG owns since 2019, when, as I have mentioned, we have started our greenfield activities. So you see that there was a very strong growth during 2020 and 2022. Which was the time when in Poland, especially. You see that in Italy, we have not invested as much simply because we entered slightly later and we had to plan resources, basically. Yes, we could not do it all. And so the reason why this acceleration stopped since 2023 is that Polish grid got fully congested. There was no available grid capacity to connect any new renewable assets, actually no assets at all. And that is due to two reasons. One, that the Polish grid is really old and it needs significant investments and significant upgrades. The other reason is that a lot of capacity was artificially blocked by, let's say, bad quality projects submitted by wind and solar developers, but also by the will of the previous Polish government, they have blocked, I think, like 10 gigawatts of capacity for new offshore wind that is going to get online, I don't know, 10 years from that moment. So yeah, but maybe 8 years from now. Plus a few nuclear power plants that they are planning to build. So, but the capacity is there, but they are blocking it for those projects without considering any interim investments that are happening into the grid. So that got cleared now. And there is a possibility, as I've mentioned, to connect a project through commercial application, so to speak, which means that if you want to connect into a certain part of a network where there is no capacity as of today, and that part of a network is not in the investment plan of a utility to upgrade it, they are presenting you with an option to cover the costs of upgrading their network. So essentially giving them a present, yes, for free. So either reinforcing a substation or cable lines or both, or whatever is necessary to do. So here we are now, as I have told, we have secured financing for that, and we are applying for this method of connection. So as you see now, we have more than 3 gigawatts between two countries, and 300 megawatts are in the ready to build stage, and probably is going to double in the next 12 months. So here's a bit more in detail overview of the Polish portfolio. Out of these roughly 2.5 gigawatts that we have here, around 800 megawatts are really early stage, means that they have just land permits, and maybe they have, not maybe, but in most cases they have applied for environmental permits. So it means that they are in process of being evaluated by authorities. Then we already have 1.2 gigawatts of projects that already have environmental permits, and then zoning permits. So that means that they can apply for grid connection, and this is something that we are doing right now gradually already. Then we have 30 megawatts of projects that have all the previous permits plus a grid connection, but do not have a building permit, which means that they will need a little bit of extra time to get that last permit before they enter into construction. But that in Poland is just a formality, because what matters is the grid and environmental permit. Then we have 261 megawatt of fully ready to build projects. So we have increased that by 32 megawatts from last year. And we have put 29 megawatts into construction already a few months ago. So just a second, maybe it's also here important to mention why Polish market. Yeah, so Polish market has two highly attractive features. One, high energy price, because they are fully reliant or mostly reliant on coal, which will need to be replaced. It's a booming and growing economy, which means that the energy consumption is going to continue rising. And then it's a big market, which allowed us to tap into it with really significant numbers, which will mean quite a lot of value to be realized over the coming years. Yep. We can pass into Italian one. So in Italy, we have 54 megawatts in early stage, meaning they just have land secured and are either waiting for the response from the grid operator, or we need to prepare a grid application. Then we have 509 megawatts of projects with land and with a grid connection secured already. So it's a very significant growth since last year. So we have achieved 289 megawatts of additional grid access. And then we believe that, and we already see that getting grid access in Italy is becoming increasingly more complicated, which means that this is a real asset that we have, and we only need to get through the land permitting process. And we have 133 megawatts with environmental assessment applied already for quite a long time, I think more than a year. And we are expecting to get these permits in the following months, which means that we will pass into the building permit phase, and potentially in the next 12 months, these projects will be ready to build. So also a word about the Italian market, same as Poland, it's a market with most expensive electricity within the EU. So you have three markets like that, which is Poland, Italy, and Netherlands. So we are in two of three most lucrative ones, and then we are in two big ones, really. And obviously, Italy has this very important feature for our technology, which is abundant sunshine, meaning that the same installed capacity is going to generate, I don't know, 60, 70% more than what we are generating in Poland, for example, or 50 to 70% more, depending on the part of Italy that we are talking about.
Mhm.
Yes, briefly here, Lithuania. In Lithuania, as I've mentioned, we are building and developing these remote PV plants. So we have built 9.3 megawatts of those. 8.5 under construction, 7.1 are pending some permits, but will enter into construction very soon. Yes, so here it's our EPC company, as I've mentioned. It's called Eternia Solar. It started operating in 2017 in Lithuania. And since its inception, it has built more than 215 megawatts and still growing every day. Which is composed out of more than 300 projects. The high number of projects is attributed to the fact that in Lithuania, those were mostly below 1 megawatt plants on industrial rooftops. So, 100 kilowatt, 200 kilowatt, in certain cases, 1 point something megawatt. Or as we see here in this photo, a 6 megawatt plant that we have built for Ignitis. Also, it's a remote PV plant. You see Garno here, which is a Polish project, which are 10 projects of 1 megawatt nearby. So it's essentially a 10 megawatt project. Um, we have established ourselves as a leading and reputable EPC company here in Lithuanian market. However, it is not our focus, and we are not looking into growing this activity simply because if you compare the profitability of the development business and EPC business, well, the EPC business pales in comparison to development. So we are concentrating all our resources into growth of our development business, but EPC capability allows us to save a lot of costs in-house in the same way that greenfield development allows us to save a lot of costs when producing a ready-to-build project. Yep. So it's still my slide, yes?
Yeah.
Yeah. So you can see the shareholding structure of Sun Investment Group, myself being the majority owner. Domas' share is constantly being reduced, and by the end of the year, he will be fully bought out. That is an agreement that was signed over a year ago. Andrius holds 23%, and all the group companies are below the issuer, so Sun Investment Group UAB. So all our project SPVs, holdcos, operational companies, all consolidate into Sun Investment Group UAB. Yeah, so a bit about the management team. Myself, so as I've probably mentioned, I started in 2007 in solar industry in Spain, then moved across various geographies, so Spain, China, Lithuania, UK, and then getting back to Lithuania, and already with the current project since 2017, you know the rest. Enrique Gomez is the COO of the group with immense experience in renewable energy. He's been COO and CEO in various renewable energy companies like IPPs, focused on wind, mostly Spanish listed companies, but not only. He's been involved in onshore wind, offshore wind, biomass, storage, hydrogen projects, PV, obviously, with more than 13 gigawatts of executed projects in different phases under his watch in these companies. Gediminas is our CFO, and he has grown inside of a company. He's been with us for more than 3 years now, and he is currently covering the financial department management function within the company. Yone is our chief legal officer since a few months ago. She's also grown inside of the company. She started being the legal counsel of Eternia Solar in Lithuania, then moved up the ladder to become the Lithuanian legal head, and now she's chief legal officer within the group. Very competent person and very experienced now in the renewable energy. Francisco is our head of EPC, so to speak, our technical director. He has been working in the major energy companies, like global European companies like Endesa and Enel Green Power. He's been involved in building huge wind and solar projects in Europe and US. So just before joining SIG, he was working for Enel Green Power in US, and he was in charge of huge utility scale projects like 500 megawatts in size. So batteries plus PV or wind plus batteries. And so his invaluable experience is really helping us to optimize on cost planning through really cutting edge engineering and this world top class knowledge when it comes to creating operational power plant. Wojciech is our country manager in Poland, also has a huge experience in the energy sector, so in state-owned utilities as well as renewable energy startups and European or global companies like EDF, Areva. PG is a state-owned utility in Poland. Columbus is a renewable energy startup in Poland, but quite a significant one. So he has both technical and business development and management skills. So we are really happy to have him on board in SIG.
Yeah, so now switching to me. We have seen the ownership structure of the group, so now it's down to the corporate structure of the group as well. As already indicated, the issuer is Sun Investment Group UAB, so Lithuanian domiciled company, and it is well essentially a holding company owning all the operations as well as development assets, except maybe for small Lithuanian solar projects, which are owned by the sister company, but all the activities in Poland and in Italy, as well as headquarters, of course, functions are concentrated in this company, which is the issuer. So to the left and to the right, we see development arms of the group. So as daughter companies concentrating on the development in Italy and in Poland, and in these brown fields, we have indicated the SPVs or project companies, which are essentially owning the projects. As you see on the left side, 2 and 2.3 gigawatts of development projects in Poland. And on the right, we have around 700 megawatts of development projects in Italy. Companies in green. So these are the Italian project companies which are offered as a primary pledge for the bond investors. But yeah, we will cover that point in the upcoming slides. Moving towards the financials, so and especially talking about the profit and loss account, what's worth mentioning and what Deividas has already indicated, that last sizable project sales transaction happened in 2022.
Yep.
So since that time, actually, the company was focusing more towards developing and advancing in its current portfolio. No any sizable sales have been completed in 2023 or first half of 2024. However, what we see in the numbers and what is also really important, that despite these large sales not happening, the company was able to achieve the profitability. So from one side, where the profitability comes is EPC, so construction business, which is providing a rather steady net profit of around 1 million euros. But also, if you look at the, for example, cost of sales or administrative expensive lines, you see that there has been a significant decrease in the cost. So why has it happened? The company undertaking a significant optimization where all the processes and headcounts were optimized, which resulted in profitability going forward. So yeah, to sum up, in 2023, the company has earned EBITDA of around 2.7 million euros, and in the first half of 2024, around 760,000 euros. And as mentioned, in the future periods, the construction has already started and will increase even more. And actually, the first sales of projects are planned to happen in 2025. And yeah, maybe Deividas didn't mention it, but you have already started some market scouting activities.
Yes. So we have hired Ernst and Young in Poland to be our selling agent there for operational plans. But maybe I will comment on that. Do you think now? Or?
Yeah, you could, of course.
Yeah. So yeah, so this is actually quite an important point because we were planning to sell part or all of the assets already at some time this year. But we have realized two things. One, that it is of strategic importance for the company value, thinking about potential maybe equity dilutions later on, um, to have operational power plants on our balance sheet. So we understood and we have been advised to retain a good part of our current ready-to-build projects once they are operational on the books. So we are currently thinking about retaining 200 megawatts for ourselves and selling 100 megawatts to the market. Now, when it comes to sale, previously in 2023, mostly part of 2022, the most aggressive buyers in Poland were state-owned utilities because they have huge renewable energy targets after separating their coal business from their core business. So now core business is going to be concentrated on renewable energy generation, and they have cleaned up their balance sheets and they started this aggressive expansion. Now, what happened was elections in Poland, and as you know, there was a very sharp change in government, meaning that those two sides, two political factions in Poland were quite antagonistic, and the fact that all of the utilities in Poland are majority state-owned, it meant that after the elections, all management boards were changed. It took time, it took longer than what everybody has forecasted, but it's ending. And then, obviously, once the top management comes in, they need to warm their feet, so to speak. They need to check who is working in mid-level management, etc., etc. They need to revise investment plans. They need to revise the projects that have been looked at by previous management boards. So obviously, very little confidence between them, a lot of suspicion. So yeah, so this process is taking longer time, and basically all of the utilities asked for time out until beginning of next year to present their well-prepared bids. At the same time, what everybody is seeing, what is happening is that the economy is entering a different cycle already, and interest rates have begun to be decreased and will continue doing so because of, well, yeah, all of the hardship that that is waiting for everybody ahead. And so obviously interest rates are an essential component that defines the value of our assets because it's very similar to real estate as well. Yes, we have three components. One is productivity, which doesn't change never. It's the same, no matter what's the economic cycle. It's just a matter of geography. Then it is the price of energy in the market, which is now still significantly higher than in 2020s, and probably is not getting back to where it was for a significant amount of time. Many reasons there, cutoff of Russian gas, cheap Russian gas, rising electricity use, rising cost of CO2 emissions, whatnot. Yes, a lot of things. And then the other one is the interest rate. Yes, because capital costs are the main costs in a renewable project. Operational costs are really low compared to the capital costs. So as soon as the interest rates drop, the equity value of a project is higher. And so we see that this trend has just begun. So it will take a bit of time for financial investors to get more active and more competitive when comparing to corporate strategic investors like utilities, which do not rely on the structured finance alone. So we obviously see that prices from where they are today, which are still acceptable and profitable to us, are going to, because we see that, for example, the divestment that we did in 2022, comparing to the prices of today, spread is like 200,000 euros per megawatt. Yes. And the only difference was that basically interest rates were zero. So at that time, well, Euribor, yes, but Vibor was slightly higher. But that's kind of the only difference. And energy prices are even higher today than they were at that time. So we obviously see a very attractive option to wait for up to 12 months, probably, to see significant price increases and obviously a significant opportunity to generate more profit without doing anything else additionally apart from just waiting a little bit. So we decided not to force the sale, and we decided to take our time to get as many potential buyers as possible to the table and to negotiate the prices up to the level that we see adequate. Yep. So this.
Okay. So yeah, moving on to the balance sheet, what we see on the asset side of the company's balance is, of course, long-term assets, intangible assets. These are the portfolio, development portfolio, 3 gigawatts, what has been indicated in Poland and in Italy. And it should be mentioned that the asset value, which is booked on the balance sheet, so more than 40 million euros, 42 million euros, it is based on a cost basis. So how much was spent to create it, and not on the market indication. If you look at the standalone balance sheet, these projects are already valued at more market price indication, and the market value of these assets is more than 80 million euros. So on consolidated balance sheet, we should say that it is a more conservative approach towards the value of the projects taken, and significant upside, of course, once the projects are sold as completed power plants. Also, that's the main point. Of course, all the other assets, short-term assets, working capital, it's a more usual thing and maybe related to the EPC business. If we move towards the liabilities and equity side, we should indicate that you see that equity value is around already 12 million euros. So we see it as quite significant, considering, again, what I mentioned about the asset side, that it's valued on a cost basis. So it's showing rather significant capitalization of the company. And talking about the liabilities, the total financial debt amounts to around 50 million euros. But what's also worth mentioning, that out of this, around 40 million, it's based on a project level. So all the financing used for the development of projects, for the construction as well, it's on the subsidiaries, SPVs, which are owning the projects. Only 10 million euros at the moment are on the group level, so on the top holdco level, out of which we have, of course, 5 million of currently outstanding bonds issued in the Baltics, and there is also additional bond issued for the financing of the Italian portfolio. So in other words, the credit risk is well managed and divided between the projects and the total company balance sheet. What Deividas already mentioned, out of the financing, 60 million, the revolving facility has been signed, targeted towards construction of the business. So it is a revolving, meaning that the company can use it, construct it, sell it, or refinance it, and use that money again to build other projects. So it's very healthy and well-suited financing type for the company regarding the construction of already ready-to-build projects. Moving back towards the bonds, so I guess we have covered quite a significant part of it. So, reasons of the bond issue, as mentioned, additional financing raised would be used to finance working capital needs and further development of the projects in general. It is not construction business financing, but more a development stage financing capital. Also, of course, refinancing of the current existing bond issue, 5 mil. So these are the main means, and of course, another rather strategic, I would say, is that the company still wants to diversify source of financing and remain in the capital markets for any future potential needs. Repayment. As mentioned, the main source is sale of part of this constructed project. So what Deividas mentioned, out of 300 megawatts, which are planned to be constructed within upcoming 2 years, 100 is planned to be sold, and that should generate revenues of more than 80 million euros. So proceeds are more than enough to cover the bond needs. Alternatively, what we have is sources coming from the construction financing of large-scale projects, which generate significant additional debt, which can be used not only to refinance any project development stage facilities, but also to refinance the bonds as well. But I would say that the focus when talking about the sources should be, of course, on the development and sale of that 100 megawatt already constructed and working power plants. Collateral review. As mentioned, collateral is structured as a pledge of the SPV companies in Italy. So it's SIG Project Italy 3, 4, 5, and 6. These SPVs in total own around 400 megawatts, so 378 megawatts of projects in rather early and a bit more advanced stages. As you have seen, the company has done the exercise of internally estimating potential market value of these projects. So it is estimated at around 22 million euros. Maybe a quick comment, how was this estimation achieved? So, of course, on the early greenfield stage, the end product is a ready-to-build project, and there is a market for a ready-to-build projects. In Italy, in recent years, the average price of ready-to-build projects is around 150 and 200,000 euros for megawatt. And based on what stage has been already completed to achieve that ready-to-build, the company applied part of that 150 valuation. So if the SPV has a land secured, company applied 25,000 euros per megawatt of valuation. If it already has a land and grid connection secured, the company applied 60,000 euros per megawatt, so roughly 17% and 40% of that ready-to-build valuation of 150. So during this exercise, we mentioned 22 million euro value was estimated. Of course, before investing, we ask all the investor to review the risk factors. Here we have only the headlines, but in general, of course, from the company's operations, what are the key risks to understand is, of course, that the company is to the most majority operating in a development business, which has its specific risks. It's a green sector which relies on the regulation. However, as Deividas mentioned, currently the regulations are moved toward making this renewable transition quicker and more efficient. But anyways, it is a business with the regulation. Another fact which was mentioned, of course, is capital price and capital availability. Significant side of the cost is a capital cost, and of course, if the debt price is increasing, the company is experiencing higher cost. However, now we are in the stage of decreasing interest rates. So from this point, the company has a potential to increase its profitability in the future. Regarding the bonds, is rather usual risks, credit risk, liquidity risk. The bonds are gonna be listed on the Nasdaq First North Stock Exchange, but of course, liquidity fluctuates, and there is no guarantee that investor which wants to exit before the redemption can do it at a price at which he wants to do it. So, but yeah, it's rather usual risks for the Baltic capital market. So before moving towards question, summary, return to the term sheet. So as mentioned, up to 8 million bond issue, offering 2-year maturity and fixed 11.5% coupon, which is gonna be paid on a semi-annual basis, secured with a pledge of Italian project portfolio. The company has a possibility of early redemption after 1 year. But of course, when considering your liquidity needs, you should focus and value that it is a 2-year investment. The placement has started this Monday, and it's gonna continue till 22nd of November. As mentioned, investors willing to invest can do it through any brokerage company or bank which has access to Nasdaq Baltic market. And also what has been indicated, investors currently holding current bond issue can conveniently replace it, exchange it through a depository corporate action just by contacting their investment account manager. What's also worth mentioning, maybe allocation. Last year we had a proportional allocation, so in case of oversubscription, all the orders were proportionally decreased. This year we have switched toward time priority basis. So meaning that until 8 million euro cap is reached, all the subscriptions are gonna be fully fulfilled, and all the other subscriptions gonna be canceled. So of course, we urge all the investor to evaluate this investment, but once the decision to invest is taken or decision to continue exchange current bonds is taken, we urge you to submit the orders to secure possibility to invest in these bonds. So yeah, that was our official part, and I guess now we can move towards the questions. First chunk of questions is related towards the marketability of the project. So maybe Deividas, you have already mentioned, but maybe in general could comment who are the buyers of the upcoming projects, and how do you search for these potential buyers? I guess now we should talk more about the Poland, which is in the stage of
which is where we are currently actively engaged in the process. So there are different types of buyers, as I have already mentioned. So one is corporate, industrial, or strategic buyers, so to speak. So mostly we are talking about utilities, so energy companies. Sometimes big energy consumers which are looking for renewable energy to put into their consumption basket. So it could be, I don't know, in Poland, for example, there are a few big supermarket chains with big demand on national level that we're looking into investing into assets directly, yes, and so optimize costs. So that was one. And then you have the financial investors, which are funds of different types. So infrastructure funds, pension funds, you name it. Yes. So what they are looking is for stable cash flows. So they would need a long-term PPA or CFD to be awarded to the project, where you know exactly how much money you are going to be generating each year, and for a period of 30 years mostly, yes. And then for the remaining part, you put a power price curve, which are provided by different types of consultant companies that are accepted by the whole market, by the whole credit and equity market. And how to organize that process? Well, there are two ways. One, you do it internally, and so you can target directly, you can contact the potential buyers directly by yourself and present your projects and do the sale. For that, you need very significant internal resources in M&A and finance department, because it's a very time-consuming process. Or you hire an advisor for that, and there are multiple ones. So in our case, we have hired Ernst & Young in Poland for this occasion, but there are a wide number of them, not just the big four consultants, but there are specialized firms which are working in renewable energy, specifically M&A and debt markets. So yeah, so
Maybe a related question. Could you indicate the current market? Is it more buyers or sellers market? Maybe what's going to be in 2025 as well.
Yeah, I believe that 2025 is going to become the sellers market. So right now we are in between. Right now we are in between. Last year was a buyer's market, but we are now leveling off and heading into the direction of a seller's market, for sure.
And maybe how long usually does it take to sell a fully developed project? Also, related question.
Up to a year. But I would say 6 months is, I mean, if current market prices at the moment when you want to sell the project are acceptable to the seller, well, you can do a transaction in 3 to 6 months tops.
Okay, yeah. So other questions more maybe related to the collateral. Yeah. So we talked now about completed projects and marketability of completed projects. So, but how liquid you would consider the collateral? In worst case scenario, how long could it roughly take to divest such a portfolio, and maybe comment who could be the buyers?
So here, maybe it's important to understand one thing. First of all, it's not a project level debt that we are talking about here. It's the Sun Investment Group, which is the issuer. So our sources of repayment are more related to Polish market divestments rather than Italian ones. So that's one thing that's important. So you are not taking the collateral does not define your risk exposure here. It is just an additional security for you to have. But now when it comes to the Italian portfolio, so before there was a government change and everything kind of stopped, and so these rules were redefined, like how long should an institution analyze your project before giving you an answer, like setting up these clear rules which were absent in Italy. So before that, there was a very, very liquid market for early stage projects, and all sorts of investors were coming into Italy trying to secure not even existing pipelines, but even contracting local developers on a I don't know, empty field basis where there is no land at all, just a framework agreement with specific milestone payments to be paid to the developer once he finds land, gets grid, submits a permitting application, etc. So that was the market up until the end of 2022, mid 2023, I would say. And mid 2023, probably, yes. And then we entered into this period of uncertainty, yes, where with the redefinition, clarification of the rules of development, prioritization of certain projects over the others. And so during this time, there were almost no investments into this type of pipeline. But now, which is very recent, we are talking just a few weeks ago when clear rules have been made for majority of the projects. I'm very convinced that this is again going to become quite a liquid market, even for earlier stage projects. First of all, because there is a lack of ready-to-build projects in Italian market. So if anybody wants to move into the market, they must take a risk of buying less advanced, less mature projects, such as the ones that we have here. And again, they would become something that could be sold in, I don't know, again, we are talking probably 6 to 12 months. That's my guess. But I do not see any scenario where you would actually need to get back the money invested in these bonds by selling the collateral. It's just not realistic assumption, I would say.
Okay.
Theoretical, yes, but not realistic.
Yeah, and related questions, you mentioned regulation. Does it cause problems for further advancement in project stage, or now, once you mentioned it's clear?
Yes, no.
How is going to change?
So now it is going to positively affect the further steps. And then because it simply become clear that what should the institutions do, how much time do they have to respond, what happens if they don't respond. So there is no, in many cases, there are much less opportunities for abuse or neglect for the authorities. And also there is a clear line of thinking in the national government of Italy that renewable energy development is something that they actually really need to help the economy go through the recession that we are basically all in right now, and to be able to participate in this accelerating market of artificial intelligence data centers, which require a lot of energy, cheaper energy, and renewables are simply the way forward. Otherwise, Italy is going to be left in the dust with that, and which is why they are now prioritizing the bigger projects in Italy and the smaller ones which are connected into the medium voltage, because that will allow to significantly increase the capacity in Italy, which they are lacking. Yes, so they realize that they are shooting themselves in the foot, and by allowing this sector to move forward, they are going to create jobs. They are going to create green energy that is necessary for the data centers, AI, etc. They are going to be in the game, so to speak, yes, of this transforming economy that we are seeing globally, basically.
Yeah, related question about collateral, but from another angle. You intend to divest Poland solar parks for repayment of bonds. Why didn't you use these parks as a collateral for the bonds?
Because these projects are already under construction and they are collateral for project level debt. And we are talking here about the construction debt, mostly where the lender is always taking the first rank pledge over the SPV. So It would simply be, we discussed this with Orion here, and it would simply be too complicated to structure a secondary pledge of the bondholders, because essentially it is you have the same protections as you have right now, because any equity value generated from divestment from these assets is upstreamed directly into Sun Investment Group. So
because it's not a project bond, but a holding company bond. And maybe also short comment, once you have one side Italian, one Polish, from diversification perspective, also having collateral from the other business side, not the one which is already generating the cash flow for redemption. It's, well, diversification wise, a smart choice. Yeah, also several questions about what you mentioned about expansion into wind-powered sector. How would will it transform the group? And related question, I guess, any plans to scale EPC business? So if you move towards wind, will you do EPC yourself or outsource? How it will change the group?
Right. So first of all, the decision to add wind into our portfolio, so to speak, was not based on wind itself, on our desire to move into wind. It was simply by the fact that in Poland there is now due to the updated Renewable Energy Act, there is a possibility to do cable pooling. So it means that we now have, in high voltage projects, we have 205 megawatts over 3 projects. So 150, 30, and 25. 3 individual projects, and they all connect into high voltage. So in this case, we can connect wind energy into the same connection point. So we use the same permits, we use the same grid access, and where we can build 150 megawatts of PV, we can theoretically plug in another 150 megawatts of wind. So the only thing missing is land, which we are working on, where to put these wind turbines on. Yes, so we need to get the land permits, but we have a grid, which is the most precious item in Poland right now, and with really short connection dates, because, you know, end 2025, mid 2026, this is already now basically in big renewable energy projects, because of the time that is necessary to build these big projects, because you need to order a big substation, a high voltage substation that takes a year or up to a year and a half to get it installed. So yeah, so this is our, let's say, we must move into wind because it simply is, it's a no-brainer value generator. Yes, so from what we have, we can double the value of the current high voltage projects, basically. And when it comes to EPC business, we are not planning to grow our EPC business in terms of selling services to third parties. But for sure, our EPC department is growing because we are building more and more. So obviously, we need more hands to manage these projects, to manage the logistics, to manage the, I don't know, control of the sites. And that is achieved through a combination of headcount increase, maybe some change of certain profiles that we have, and also outsourcing certain functions that we see as like more fluctuating in terms of workload. Yes, so yeah, that would be the answer.
Okay, we have a financial question about standalone balance sheet. What is on the other investment and how was it valued? 87 million euros. And what is under loans and deposits? 35 million euros. So maybe I'll comment what I have already touched a bit on the slides. On a standalone basis, the project portfolio was valued, I guess, on a DCF basis by including also an outside evaluator. And it represents the market estimation of the current portfolio. As mentioned, consolidated balance sheet is looking at it through the cost basis and showed 46 or 47, I guess, value of these portfolios. But again, another related question, what are under loans and deposits? 35 million euros. In talking about standalone financing, it's simply loans provided to the daughter companies to finance the current development of these projects. And I guess that's why we encourage everybody to look more into consolidated balance sheet, because of course, once you have a group holdco, in part function of which is to coordinate all the financing between the daughter companies, these amounts of loans and deposits provided are shown as significant. But once you look in the consolidated balance sheet, I guess, yeah, there is no such significant amounts of loans provided, except for loans which were provided towards Lithuanian solar development sister company, but the size of it is rather limited. Also, a quick question, maybe a bit about the recent share sale. So why did the other shareholder sell his shares? So I understand everybody is looking from a capital market perspective. If the owner is selling, something is not good, but it's more about concentrating of the most important shareholder, its position, yeah?
Yeah. So no, so the case with Domas was not a founding member, let's say, of SIG. He has joined quite late in the game. So he came in, we had a plan, and later on he found himself a better opportunity and decided to leave the company. So his shares are being bought back. So simple as that.
Okay. Yeah, and the last question, more technical about refinancing. I'm considering to reinvest my initial investment from the earlier bond issue. How does it technically work? What are the steps to do so? So I can comment from Orion Securities side, since we see what's happening. So all the investors should have been received already on the Wednesday notification from their bank or brokerage that there is a corporate action initiated, and they should have received invitation to reply to a message by stating if they want to exchange amount of the bonds currently owned, if they want to exchange all bonds or less. So what investors have to do, we have to reply to these messages. If on some reason we have not received it, we urge them to contact their brokerage manager, so banks, financial brokerage companies, and from what we have seen, it's simply enough to express your intention to convert, and it is done. It is recorded on a depository accounts, and we are receiving this order and securing it in all the offering books. So that's it. Of course, nominal amounts gonna be exchange. The interest accrued from the old bond still will be paid out on the redemption date, which is 29th of November. So that's all the questions we have received today, and I see that we have spent all the allocated time. And once more, I want to thank Deividas. I want to thank all the investors who have joined this presentation. If you still have unanswered questions, please contact Orion Securities. Send us an email to the email addresses indicated. We will contact it. If needed, we could also even arrange another short Teams meeting with Deividas to clarify the issues. So that's it for today, and I hope that you have received enough information to make your decision. And yeah, we invite you to participate in this offering. Thank you very much.